Hey, good morning, everybody. It is Kody Ashmore, Director of Weekly Option Strategies, obviously here at Simpler Trading, and I want to present an idea to all of you awesome people watching this video, a potential idea to place high probability trades that you get statistics on, only requiring about $3,000 of capital, and potentially, if everything plays out and active management is followed, then you can make anywhere of about any greater than $75,000 a year. It's just an idea. I'm doing it today. Let me show you what I mean. All right, so first off, here is the SPX, and the SPX is down quite a bit since I entered this position. And the position that I am in is actually a Batman. Let me show you a Batman if you're unfamiliar with it. All right, so here is a Batman. It is basically, I did it as two unbalanced flies, and these peaks are our L2s or I guess L2 and H2 from our quant pivots. So all that being said, and I'll show you what the quant pivots do and how they work and kind of like why I decided to go about this way. All right, so first off, I have always been a fan of doing daily 0 DTE iron condors for an income style trade. You just collect that premium, you have a stop loss, so on and so forth. But the part about doing daily iron condors, especially in today's market, is when you would get these really big moves, right? Like today, since I've entered the position, the market's down again. It was down over 1%, coming down and kissing the daily 200 SMA. So when you get these big moves like that, they could be pretty scary, right? Especially when doing an iron condor. And so I was like, well, what if I just did a Batman at these L1 and L2 levels? But if we get a big move, I get a bonus. I was just talking to Small Account Mastery or Mentorship about this, and I'm just calling these little cherries on top. Because if we get a big move and we stay down here, then I make more. If we get a big move up here, then I'll make more. But if it just stays in between, hey, I made my income goal. So it's just something I'm playing with, and let me explain to you so on and so forth. So when I say explain to you, let me tell you how it is roughly almost $75,000 a year. So, and we'll use this example here. So first off, this is a BAM. I'm going to show you the position, then I'll show you the setup. Okay, and this is while the position is happening. I have not closed it yet. I'll probably come back and show you the end, so you get to see this whole trade play out. Like I said, I've been doing these 0 DT iron condors. I do a lot of 0 DT trades. There is a reason why I'm the director of weekly option strategies, because I do a lot of shorter term trading. I've always enjoyed doing shorter term trading, and now I get to do it daily instead of like weekly since the SPX daily expiration has came out. All right, so like I said, the position first. So it is, I have an unbalanced fly down here at 42.30 and an unbalanced fly down here at 42.20. Oh, no, it is 42.15. Okay, and so I collected a total of $2.45 of credit, and I put 2 on each one. And at the moment, I am down on the position. Since I entered the position when it was right at the open right here, we have moved lower. I'll show you my position here. So here you can see that for this position, I needed a total of $3,000 to enter this trade. Now I'm going to open it up. You can see all my positions that I'm in here. I'm going to go ahead and show you the Analyze tab here in the actual position here. All right, and as I'm moving around, you see this little box up here. You see with the credit received, I have a total of $490 of credit for the day. All right, cool. But if we get down here in this cone, we'll just say at whatever it pins, then I make a total of 1,400. If it rallies and gets up here, then I make a total of a little over 1,400. All right. But ultimately, what I'm trying to do is just keep it in the middle and just collect the premium, right? And let's just assume that you do this over and over. And you see here, well, at the moment, when I entered the trade, there was like 89% probability of profit. Right now, since the decline, it is down at 66%. But I do have faith and such a large move lower that it is going to bounce. And I'll show you the quant pivots here in a moment as far as how I'm using them for this particular trade. But I want to go over the math first. So this is 490. So we'll just say 490. And then the way I'm actively managing these trades for like stop losses is if we pass down this level, past where the current where the current value of the position is. If we right here where they cross, you can see if I put it right here, you look down here, this level, you see that right here that I'm losing a little over $1,000. So if max profit is roughly 500, max, or if I actively manage it, it's about 1,000. So that is roughly, that's a good risk reward skew if you actively manage it and it has a high probability of playing out. So I'm okay with that risk reward with active management. So risking 1,000 to make roughly 500. Now let's just say that we do make, we'll just say we're roughly making about $500 a day on this position, right? And it's very consistent, it's profitable, it happens over and over. Now, but losses do occur. But let's just say out of your average, and this is just spitballing it, let's just say some catastrophic stuff happens, end of the world stuff happens, I don't know, just some losses happen. And then you have a monthly average down of about only 300, right? All right, so wins and losses, your averages are roughly $300 a day average. Now, there are 21, another average is roughly 21 trading days in a month. So if we take 300 times that by 21, that is roughly $6,300, okay, a month. Now let's go ahead and just times that by 12. That brings us down to 706K a year. And that's just if you're just averaging this amount throughout the entire year. So you can see how you can take high probability, active management, and still make a decent living. Like this is not going to buy you Lambos. This isn't going to buy you a ginormous house, but that's a decent money for staying at home and clicking buttons. You know what I mean? You enter the trade and then you could do whatever you want for the day. Like for me, I entered this trade, talking to my members in small account mentorship, doing some laundry, multitasking, getting ready for the weekend. But I'll come back and we'll see how this is playing out. At the moment, you can see we are at a loss. We'll see if that happens. I mean, it can happen. I have active management in place, and I will be here watching it. But I'll keep y'all posted on how this plays out. But hopefully that math makes sense. If it does not make sense, please in the comment section tell me if it makes sense. Any part of it does not make sense. Now, like, how did I pick my strikes? And I imagine you're thinking, oh, that's cool, Kody, but now show us how I did it. So if you're familiar with quant pivots, I have been using quant pivots for a very long time. And just to prove it, because I've said this before, and someone or I was not believed. They said, no, you have not. And I said, well, let me prove it to you. All right, so if you go to my YouTube page, my little YouTube page, you can look up active profits, and then you can scroll on down. Look, I have right here, flawless iron condors with 10x bars and my weekly wires, which is the original name of the quant pivots. Look, 2 years ago. Bam. You can scroll down here and you can see all these little videos I did 2 years ago. Guess what? Where I break down my trades I was taking long before I was even a part of Simpler Trading. And guess what? There is a lot of quant pivots in there. Like I analyze all of it. And here's a little guide how I use quant pivots and the 10x bars for iron condors. But those are when I had to do them at weekly type of time frame instead of daily like I am now. But by all means, like go there and check it out. So the reason I say I throw that out there is because I've been using them for a long time and I get how they work and I have confidence in them because I've used them for so long. And if I use this right here as a guide, just as an example, I mean, the last 2 days, right? If we look at the last 2 days of the SPX or SPY, we've had some big moves. Look, L2 down here, respected. We still fell again yesterday. L2, respected. And so my thought was, man, if I just throw Batmans down at these levels, cool if it pins. If not, cool, I collect my income. And then, so that's what I'm doing. Up here is just H2, and down here is L2. Now, the part that is unique is we give you the statistics on this. So right here, like right now, we're down near L2. We closed below L2 in the last rolling 95 days. We're closing down there 10% of the time. Okay, so you know 90% of the time we're going to close above it. So not only that, you have the statistics in your favor, and that's L2. What about H2? We close above H2 only well, yeah, we'll call it 7% of the time. So you can see you get the stats where price is usually with inside of L2 and H2 roughly 82% of the time when you get these averages. So 82% of the time, we're in this box. You place a high probability trade, and you just let the math work out, and then you actively manage it. So that's the idea there. If you have the quant pivots, tell me how has it been working for you? I am curious to know. And how have you been using the quant pivots? I would like to know that as well. But this is something I'm going to keep running with, trying it out, and just looking for that consistent little income on this. It's as I do like doing 0DT trades, but what if I could take the chaos out of it and just do this over and over and let the numbers play out as they are in front of me? But that is all I have to show y'all for now. I will hop back on with this recording once we know how it works out on close. I either made the money or I don't. Only time will tell. So I will keep y'all posted. All right, here we are about 1 minute into the close, and why wouldn't the market do this before, um, or why would the market decide? Why wouldn't the market decide to do this the day I decided to record this type of video? Just my luck, but I did just close it out for a loss, and I'll cover that here in a minute. But before that, what I want to show y'all and invite you all to Simpler Trading's Orlando Summit. Um, would love to meet everyone that follows us, and this is a great place where you can come and then you could get to meet all of the simpler trading traders, in-depth trading courses, and there's even a poker like right here. There's like 007. There's John the Poker Champ, JR. We got everyone comes and hangs out. So what all do you get with this? Well, if you just get the basic package, you get JC's portfolio margin presentation, Henry's unbalanced fly presentation. The only thing you don't really get is the cocktail hour and poker tournament that is occurring on the night we get there. And so that's one thing you don't get. And then, but if you do go, you also get discounted prices to the money show, which I think will be pretty cool because if you think about it, it's more than just simpler trading traders there at the money show. It is traders of all different shapes and sizes that I think will be pretty cool to see there. I personally never been to a money show, so I'm looking forward to checking it out. But if you'd like to come hang out with us, you want to go to a cocktail hour and feed JC a bunch of drinks and figure out his deepest secrets, there you go. This is your moment. The question is, are you going to jump on it and own it? Boom. But all right, enough about that. So what did I do with this Batman trade? So you can see it did go outside of my break even. So like what happened? How did I actively manage this? So here are my fills. And the main thing I want you to take away from here is how active management could also offer good risk reward on the positions or as well, right? So if you recall, I got a total of, you can see here, $2.45 credit, and I got two on each side, or I guess I should be circling the other side, two of each side. So I got 245 credit, and I did close it because I did close it a little bit near my break-even point. I was watching it, you know, near this level. I was like, okay, we're gonna break, we're gonna keep flushing, and we did, and it started coming down, and it was on this candle right here. I noticed the ticks were they're starting to turn up. They got smacked right back down here to like 1,000, and then I was like, okay, that's just enough. I'm just gonna go ahead and stop out and manage my risk. And so by managing my risk, like if you recall, I told you when I entered this position, I had an 89% probability of profit, right? 89% probability of profit. And all I needed to do was for price to stay between L1 and L2 on the daily time frame, which today was actually one of those moments of those 10% of the time where we closed below it. Today was one of those times, and it makes sense. I mean, look, usually the market doesn't really go down to those extremes, but lately, if we just look at all the recent days, Man, this does not usually happen. Up here at H2, up here at H2, down here at L2, down here at L2, down here at L2. That is volatility, and that usually does not happen. But there you have it. It is happening. But since I did fall within that one, that 10% where it closes below it, and I still just played the probabilities. And sorry, a lot of clicking going on over here. I just put this here. This is what I have to use to write. All right, so like I said, I got $2.45 a credit, and that equals a total of $490 a credit. And if I would have pinned it, it would have been a total of $1,400. That is horribly written, so let me do that again. $1,400. All right, and that was with this part was an 89% probability. But I stopped out. So I did stop out. I got my fill at 405. So what does that equal? That means I took a $1.60 loss. $1.60 loss. I know I'm not doing a very good job of this. We times that by our 2, and that equals that I had a whopping total of a minus $320 for today. So if we tie that all together, what exactly am I trying to say here? So my max profit that I was going for, at least for the credit received, was 490 if we stay within those levels. That's what I was looking for. But I ended up taking a $320 loss. That, my friends, is still a good skewed risk to reward with active management. You see what I mean? Like that's still a one-to-one trade. That's just like doing a spread, 5-wide spread. You got 250 for it, and you're either going to get it right or wrong. Well, I placed a high probability trade with active management and still made it one-to-one. So this is something I'm going to keep doing as a goal, just to try to make an average about $300. That's, like I said, that's going to be an extra $75,000 a year, just on $300. You know, I could go higher, could go lower, could be anything like that. But that is what I'm targeting. Just 300, an extra 75, and I will just continue rolling it out. And that's not even including compounding. That's just what I'm going for right now. So I hope you all found this video helpful. If you have any questions, throw them in the comment section. I go back to the channel and look at all the videos and try to answer any questions. But this is something I'll be doing in the small account mentorship and myself, or doing in the small account mentorship and doing it myself and whatnot, and just trying to get that going. But I hope you found it, like I said, helpful. If you have any questions, feel free to reach out. Hope to see y'all all at the money show. And I did not say, if you wish to, how do you know where to find this? If you go to simplertrading.com /Orlando-Summit, that is where you can reserve your spot. But have a wonderful weekend, everybody, and I will see y'all the next time. Take care, everybody.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me